Hello to everyone, my name is Gregor and welcome to our new video Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the 10-year US yields, German bonds, euro dollar, crude oil, gold and German DAX. Now firstly, if you take a look here on notes, you can clearly see that we are seeing some very nice, important and strong reversal from that October lows, and also notice that this resistance that goes back to October of 2022 did not hold. Okay, so we are actually seeing a price that is reversing back above the previous 2022 lows, meaning that most likely we have a bottom in place. In fact, we are also seeing this broken trend line, which confirms the end of a 5-wave drop within a high degree wave 5. So I think that a major cycle here could be happening. So I would not be surprised if we see even more upside here going into 2024 for a higher degree wave B correction. Also, if we take a look on German bonds, you can see here as well that price is coming out of this wedge pattern after the divergence here on the RSI. So even German bonds suggest that we could see more upside. So this also comes from the speculations that central banks are done with the hiking cycle, especially one in the US. So if US yields will come even lower, it can mean that maybe yields in Germany will fall slower compared to the one in the US. And um, this differential between US yields and German yields could potentially drive the euro dollar pair to the upside. Okay, so I have here this one also represent this kind of a scenario. So this is German US yields, German yields minus US yields. Okay, and you can see clearly that there was some nice, very nice support here on this ratio. And if this market is really going to stabilize and turn to the upside, this could have some positive impact on the euro dollar pair based on the correlations. And now if we take a look also on the euro dollar, you can clearly see that that was a very nice bounce here from that, away from that 2023 lows from the start of the year. So major support is happening here, and that's a pretty nice and strong recovery so far. There is some resistance around 1.1 level, which is not a surprise, because looking at the 4-hour time frame, we have a pretty clear 5 subways within wave 3. So some fib resistance around this round figure caused this pullback that is in play. Now, if we think that that's a wave 4 as part of a new impulsive recovery, then this upside potential should, new upside potential, more upside should be seen after 3 subwaves. So very nice support that should hold. Then next week is around 108 to 108.50. So that's the perfect area for the next bounce. Also, let's remind us that we had a pretty nice and strong break to the upside here on the euro above this channel back at the start of November. Okay, so normally this kind of a breakout confirms the fact that most likely we are in an impulsive bullish sequence rather than in a corrective rise. So that's why I'm seeking for potential supports here after this wave 4 dip. So I will be looking for more gains while the market is trading above this 106.95 level. Why this level is important? Because if we think that we are in a wave 4, then wave 4 must not trade into the territory of a wave 1 or wave 2. Okay, so as long as we are above that level, I think that this trend is still alive and could potentially see more upside after this ABC drop is finished in wave 4, as I said, ideally next week. Now looking at the crude oil, we have seen some pretty nice reversal to the downside yesterday. It came despite the fact that OPEC is trying somehow to stabilize this market with output cuts. And what we are seeing is still very strong resistance around $79-80 per barrel. Notice that that was only a 3-wave rise, okay? And this was the resistance that goes back to October swing lows, and this was also the swing wave for high here. So I think that we have to respect what the market is doing. It's very hard to say that bottom is in place here, because clearly this can be counted as a 3-wave corrective rally for a wave 4. So I'm afraid that there is room for more weakness here. Potentially into wave 5 of C towards $70, $72 per barrel could be interesting. Potential supports still here for December. Okay, so for now, crude oil still in a bearish sequence, but I think if we see a new low, there can be a very nice end of the year rally here for crude oil from that lower support levels. Now looking at gold, Gold is having some very nice, interesting development so far. We are seeing price making higher highs, higher swing lows. We are also trading close to these highs back from earlier this year. And what's probably the most important when it comes to the recent intraday developments is that we broke quite significantly this 2000 psychological level. So I think as long we are above that level, and also obviously above that October swing high, I think that this is still an uptrend that could easily resume back to all-time highs. Also, looking and observing the price action on a smaller time frame, notice that we have some very nice potentially impulsive personality here within this uptrend. Why? Because we have some very strong moves here in the middle. So as long as we are here, as I said, above 2000 level or 2007 to be more precise, I think that there is chance for more upside. Okay, so I'm thinking about more gains that will follow next week. But if suddenly, let's say that I'm wrong and price drops back below this level, and at the same time we see this broken trendline support, then I'm afraid that we will step into the more complex, higher degree correction, but still as part of the higher degree uptrend. Okay, so even if we see some deeper price action, I think that much more important better supports will still show up at the start of 2024. Now, if we take a look on German DAX, well, stocks, as you know, are in uptrend, but unfortunately, I see price here in a fifth wave. So what that means? Well, it means that we could be in late stages of this current intraday bullish cycle, but there is also some resistance around 16,550. In that area, notice that wave 5 will also equal to wave 1. So despite a very strong uptrend, just keep in mind that there can be some limited upside and potential setbacks still seen here in December. Traders, I hope that you enjoyed this video and talk to you next week. Enjoy your weekend. Bye.